Up, everybody? Oh, my magnificent monsters. Welcome back to the show. Grab your poison of choice, whether it's a monster. Strawberry Dream today. It's probably one of my favorite flavors. And we're here to figure out how to get rich off of the chaos. So, while you were sleeping this weekend, or maybe just enjoying your weekend, the geopolitical chessboard flipped over. Iran's supreme leader has been, let's say, permanently removed from the chessboard. And in response, Iran throwing a fireworks party across the entire Middle East, targeting pretty much every U.S. ally on the board, every asset they can try to shoot a firework at. And right in the middle of all this is a 21-mile strip of water called the Strait of Hormuz. And this matters. Why? Probably to your wallets. So pay attention, because this is part of a bigger thing, and it could either make you a lot of money, or it can make you your next trip to the gas station feel like a shakedown. I mean, that little strip of water, it's the world's most important energy choke point out there. 1/5 of all the world's oil, at least the oil that the world burns, and nearly 20% of the world's liquefied natural gas flows through this little spot every single day. And right now, it's kind of been shut down, halted. Goldman Sachs, in a note that probably had smoke coming off the keyboard, is already pricing in like an $18 per barrel war premium. And that's not just a guess, that's what the pros are betting in real time. Barclays is whispering about $100 oil by the time that the markets open. Well, that's not looking very likely. Some are saying 130 if this keeps getting worse. I mean, it's all in the chart, though. I've talked about these numbers. They're not even that crazy. So if we kind of see those things, though, your wallet could feel a whole lot lighter as you visit the gas station. Unless you were to position yourself on the right side of all this chaos. I mean, this isn't just another headline. This is a fundamental repricing of the global economy's most important commodity here. So I want you to think about the situation kind of like an hourglass, a giant global hourglass. And the narrow part, it's right there in the Strait of Hormuz. And all the cheap, abundant energy is the sand in the top of this hourglass bulb. The global economy, it's at the bottom of the bulb, waiting to get filled up with the sand, the energy. When the sand flows freely, everything's great, right? But right now, somebody just pinched the middle of the hourglass even tighter. Goldman's desk jockeys have laid out a few scenarios here. If the strait is shut down for a month, or maybe longer, some pipeline workarounds and tapping strategic reserves. I mean, we could look at a $10 jump, $12. If it's a longer term disruption, the models break down. The prices don't just go up, they go absolutely vertical. They have to rise enough to cause a recession, because that's the only way we destroy enough demand to keep everything in balance. That's the danger we're fighting with here. I mean, that's the kind of scenario that Goldman Sachs is laying out. So how do we play the Hormuz hourglass? Well, you don't panic. We look at who owns the hourglass, who sells the sand, who the big players on the board in this chess game. The winners, the first obvious plays, the big oil producers. You got Exxon, you got Chevron, and they're probably going to make a killing. Higher oil prices go straight into the bottom line, no matter how long it takes to move the oil. It's the simplest, most direct way to play this, but it's also a very, very crowded trade at this point. You make money, but the real monster returns probably hiding somewhere else. Get it? Monster returns? And let's look at other winners. So the people we don't usually talk about, the people that smart money plays, that the general population never thinks about, oil shipping tanker companies. Think about it. If the main route is blocked, where do the ships go? They have to take the long trip around, a trip that normally takes like a week going through the strait, now takes 3 weeks to go the long way around. That means demand for ships, well, instead of it taking a week, now it takes 3 weeks. I mean, that takes 3 times the ships to do the same kind of capacity. If your capacity, I mean, think about it, supply and demand. You've got so much supply, demand is now higher because we have to go the long way around, but we need the same flow of oil. Supply and demand, prices go up, right? Prices could go to the moon. It's already been showing up in the prices. The cost to charter a very large crude carrier, the market lingo for that is VLCC, from the Arab Gulf to China has actually tripled in the past month. This was a warning sign that was already coming. Tripled. Think about that, tripled. These companies are the toll booth operators of global chaos. They don't care what's in the ships. They don't care who's buying what. They get paid to move the product. You've got companies like Frontline. That would be Foxtrot Romeo Oscar, FRO. You've got Teekay Tankers. Their ticker is Tango November Kilo, TNK. And then you got DHT Holdings. That would be Delta Hotel Tango, DHT. These stocks have already been moving. But if this disruption lasts longer than, some people are thinking, their earnings could look more like a statistical error. I mean, it's just kind of pop. I mean, they're ones that own the hourglass, basically. They're the ones that control the choke point as far as how many ships are on the field. And of course, you got vultures out here. Defense contractors, Lockheed Martin LMT, Lima Mike Tango, RTX, Romeo Tango X-Ray, RTX. They make the toys that are being used to break the things on the board. It's a little bit of a cynical play, but this is Morning Monster, not Sunday school. So war is a business. Business is booming. We can make some money off of it. Booming, literally. And for every winner, there's a long line of losers. The most obvious, airlines. Your Delta Airlines, DAL, Delta Alpha Lima, and United's. That's Uniform Alpha Lima. Their biggest cost input is jet fuel. They live and die by their contracts for jet fuel. And if jet fuel goes up or goes parabolic, or their margins get crushed into dust, if not taking all the profits out of the thing and turning them negative. That's where you get those fuel surcharges and all that stuff showing up on your airline tickets. And then there's us, or at least there's companies that depend on us. Every dollar we spend at the pump is a dollar that you're not spending on a new iPhone or a night out, that consumer discretionary stuff. You're not buying new TVs. So consumer discretionary stuff can hit a wall of pain if the price of oil, like I said, price of oil controls everything. Inflation ramps up, it causes I outlined this weeks ago. I talked about it 100 bajillion times. You can believe it's all because of Iran, or we've had this set up for a while. What was going to be the card that, kicked it all off? The biggest trap here, though, the one that I want everyone to avoid, is natural gas fake out. You're going to hear about energy prices spiking, and you're going to be tempted to buy anything that sounds like it's energy related. Goldman was very clear on this, though, in their report. The impact on U.S. natural gas, the stuff that trades at Henry Hub, probably not. Probably going to be barely a hiccup. The U.S. is a net exporter of LNG, liquefied natural gas. We're already running our export terminals at full tilt. A global price spike doesn't mean U.S. is going to be following in lockstep at all. Don't get suckered into buying something like UNG thinking it's the same trade as oil. It's not. Be careful. So, here we are. This Hormuz hourglass, it's pinched. The sand is kind of getting stuck. Everything's jammed up. The price of energy, the lifeblood of our economy, and when we say energy, we really mean oil, is being repriced in real time. And we can stand there and watch our wallet get drained or position yourself to profit from disruption. Look at producers, but look harder at the toll booth operators, those tanker companies. And there's other ones. I just highlighted a couple. They get paid in the chaos. Avoid obvious losers. Be careful around airlines or people that, cruise ships. Be careful. Be on the right side of the hourglass. Stay cynical. Stay informed. Stay monstrous. We'll check out some charts and try to find out where we might make some money today. The list is absolutely bonkers huge. I got the poll going, and it looks like most of y'all believe the hype that all this stuff is because of Iran. It's unfortunate that you believe the news that much. I warned for like 2 or 3 weeks coming into March that we were going to see a pullback. Didn't matter what it was going to be. It's kind of funny. Kind of funny that way. Let's jump over here. Get on this chart. Love it, love it, love it. Yeah. So the Qs, we just start back and hop back to the Qs. The Qs on Friday kind of predicted the range, and see if it'll reload now. It's like trading view is going to be slow as dirt. Beautiful. And then SPY, we had a range for SPY, we had a range for Qs. Oh, look at that. That's where it looked like it might hang out, but that was my kind of secondary guess. We busted right through it into the close, and then now we're down at the bottom. That big chunk of options was down there. Expired off, and now here we are down here. Climbing, though. Remember, war is actually bullish for the market. So anybody that's thinking that the market's pulling back because of Iran stuff, it's not. War is bullish. The only thing that would make it not bullish is if somebody shot missiles onto our home turf. So that's be careful. Be careful out there. Believe in the mainstream media narrative. I know it's tough. Like all the news talks about how this is so bad and the economy is blah 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 blah. Don't get sucked in. I'm telling you, if you can liberate your mind from the belief of mainstream media narratives. So today we're going to be over here. We're going to have some predictions on where we go with the gamma at the end of the show. Welcome to March, everybody. And I'll update that toward the end of the show here today. QQQ. There we go. Look at that. Look how close I got there. That was beautiful. Beautiful on Friday. Let's pull these over, see if we can guess where we might be today. So I can't do this early. Like, we just opened the market. It's 9:30. If we looked at the gamma charts right now, they're not going to tell us very much. Why? These are gamma charts right here. If we started trying to dive into this and dig it out and try to predict where we're going to end up today, we're in amateur hour. All right, that's what they call it, the first hour, where people are just letting trades fly. People that got freaked out, that don't pay attention to the market, they don't trade actively. They're like, oh crap, I got to sell everything. So, I got to sell some stuff so I don't get sucked down into this war junk, because the mainstream media has sold this narrative that everything's going to pull back and blah, blah, blah. I mean, come on now. But we're going to see a bunch of stuff flying around, a bunch of options plays, a bunch of crap in the market. And this is going to take a little bit to settle out. And we're already seeing options pile up here for Friday. And this is QQQ. And we're seeing the biggest level on the board is the main monthly March expiration. And it's significantly below where we are right now. This didn't just happen today. This has been sitting out here cooking for a couple weeks. It has nothing to do with the war. So be careful. We already knew we were going to pull back in March. I mean, we came in this morning. My dad's like, what do you think about the market? You know, I was like, what did I tell you it was going to do in March? He goes, well, you said it was going to pull back. I was like, have anything to do with war? He goes, well, I guess not. I mean, come on, everybody. Come on, everybody. So anyway, we'll circle back to this toward the end of the show once we got about an hour, 45 minutes of contracts flying around. Look at the S&P here this morning. So we got a gap, right? How do we fill that in? We go over to the futures market and fill it in. We reopened trading last night at 6 p.m. A little bit of a gap down. I already warned that we were coming into this bearish. Like we were bearish all day Friday. We hit the Thursday. We tried to break out and failed. I mean, hello. It just, that was a setup for going down. Had, maybe some people subconsciously knew that whatever was coming, but I mentioned we were probably going lower low, and we haven't done that yet. It's probably coming. Has nothing to do with any kind of war rhetoric. This has all been cooking for months, too. NASDAQ. When you go look at NASDAQ, NDX, I've been talking about we probably need to go lower. Because this was the all-time high. Back in October of last year. This right here, despite Trump and, we're at all-time highs. All-time high was back here. We've just been churning in here. This initial drop, we're probably not done with this correction until we get below it. Right there on NASDAQ. I mentioned that March was the perfect time to do that because seasonality-wise, we usually have chaos in March. And let's see. Where did I put the seasonality chart? Oh. Your content is no longer valid. I'll have to reload it, pull it up here. That was cool. Love it when... Grab the pinned messages. Love it when Discord or whatever decides that the chart I pulled up is no longer valid. Let's see if we pull this over. There we go. So this is a 20-year historical view of VIX right here. And that's S&P 500 volatility, not necessarily NASDAQ. But it's kind of the broad market. 500 companies, they're broad swath. I kind of mentioned that we might see some volatility in March. It's just out of 20 years of the last, this is a 20-year average too. So historically we see this. It's not a surprise to me. Like, holy cow, the war fired up. And also, secondary indicator, I mentioned once we got down in the 50s, crap was going to get going so we could push oil up, and push oil up we did. But that's not that big a pop. We're only up $8 to the top there, and where the current price is, we're only $5 up from Friday. Certainly no like 20, 30, $40 higher situation. And be very, very careful right here. This thing can come right back down. If we break back below this downtrend of highs that we've had going for years, since 23, so that's almost 3 years, 2.5 years anyway. If we break back below that, like we did here and here, and if we do that, probably coming right down here And then probably going right up here. So be careful getting sucked into what we got going on right now. Now, if we back test and hold above that, pull back and hold, probably going up there sooner than later. So that's the thing to watch right there. Can we stick the breakout? Has nothing to do with Iran. But I did warn missiles would fly when we got down to the 50s. And then here we are. Just took a couple months for it to actually all pan out. It's the craziest stuff. Anyway, Russell, still chopping around in here. Zoom her up, Buttercup. Yeah, I mentioned that we might have to take a dip back to the breakout one more time. This kind of failed to pop higher. Pulsing down, back below. So if we break below this level right back here, probably coming back to that 2480, 2450 area on Russell. It's just kind of the way it is. That low right there, right around 2570. So it's almost 100 points downside right there. Get below that, 100 points downside. You'd be like, how would you play that? Well, there's a couple different ways you could play. IWM is the ETF, similar to SPY and QQQ. You know, SPY for S&P, QQQ for NASDAQ. We've got IWM for Russell. And if we're going to take a 100-point spill, that'd be roughly a 10-point downside. Right here, back in that 245 area. Maybe. Maybe not. Maybe we just hold it here and go on higher. So if you wanted shares for going higher, UWM, it's ultra leveraged. We're holding in here, break higher. This could be a significant pop. So I'm not convinced that we're just going bearish here. I think we have some chaos potential for NASDAQ and for S&P. Russell can just turn and go positive though, even in the face of all that. So oil already looking a little sketchy here. That's already a first move down and a retrace. Look, there's the high, here's the low. 618 retrace. 1, 2. Watch for the next move. This is not rocket surgery. Speaking of rocket surgery, anybody see the Rocket Labs launch this weekend? It was pretty cool. Launched a hypersonic vehicle for somebody else. So oil, watch for that move. I think it's going to come back, fill the gap. Right in here, and then we'll see what happens. If it does it in a 3-wave move and we stop and then we reverse, we're probably going higher now. If we continue on down to like 64, back to the low we had on Friday or Thursday, break below that, we're probably going to pull it on back down, heading toward the retest of the long-term breakout. So we'll set alert right down here. Gold, nice little pop. If you're in the gold rush trade, probably ought to close it out before things turn sour grapes. I mentioned we were probably going to pop 54. Guess what? We did it. We did it. There it is. Watch out for the next leg down. Gonna be vicious. More than likely. We're gonna match that first move down. Right off of this. Puts us in the roadmap line. Possibly an extension right down here. It's not magic. It's just price action. And moving on. Bitcoin still continue to do absolutely nothing so far. Tighter and tighter consolidation. So this was a fake breakdown, fake breakouts, and we're just sitting. I was talking about a stock at rest stays at rest. Bitcoin at rest stays at rest till something tips the chart. It's in a tighter and tighter range here. not doing jack diddly. Now, that move up, that retrace, holding in here, has the setup to go higher. That's what I expect. That's my primary expectation, to come back up in here. Somewhere right up in this zone. Then we'll probably do a 3-wave retrace. And then we'll probably do another spike. Probably be from here to here. This will probably be May or June when we get over here. And then, oops, pull the chart over. You see, I've already got it drawn on here. There's the move up. There's the retrace. There's the move up. Probably May or June. And then cruise down into October. That's what we likely have. Nothing's really changed. Ethereum, nothing's really changed. Dollar, look at here. This is unusual because we're getting the dollar popping, but we're also getting gold and oil popping. Unusual, where we have a green day and a green day. Like I said, correlated when they're correlated, not when they're not. So don't always get sucked into the rhetoric. Strong dollar equals oil and gold going down. It's not happening today. But strong dollar could turn into the narrative that it's making gold and oil drop tomorrow. Just be careful. Careful who you're listening to. These are all independent charts, but big, think about it. Big reversal here caused this epic drop in gold and silver, right? That's what the mainstream media said. So if we get a big pop here, wouldn't that mean that gold would drop below the low we had before? That'll probably be the narrative that comes back if we keep being stronger on the dollar. Now, the last several months, we've had this downtrend of highs cooking. If we actually break through that, something to keep an eye on. If we get above 102 on the dollar, this is going to mess with everything globally. If we get above 102 on the dollar, the short dollar trade is going to stop out and start being a short squeeze. We'll probably pop this baby from 102 to like 120, 130 pretty quickly. And it's going to put some major pressure on gold and silver, oil. So we can see this thing break out and take a massive run. The short squeeze starts around 102 because we have to pop up to a higher time frame. The short dollar was the big trade last year, coming in at 25, but we actually peaked back here in 22. Anybody remember what happened in 22? It's a big market correction, even though the dollar was climbing like a beast. So what happens if the dollar starts climbing like a beast again? Maybe even bigger. Correlate when they're correlated, not when they're not. NKD, as I mentioned, we may need to take a bigger step back. We hit the aggressive upside target. Watch for this to take an even bigger step back over here. Back down around 50. The global liquidity indicator, because people go borrow yen and then they take it and invest it in higher yielding assets and then take those assets and put them down for collateral for borrowing more yen. And this is the Japanese stock market goes up when all this happens. And it's just an indicator of global liquidity. Apple taking a step back, lower highs, still set for a 295 target. Amazon still working on building the base here, and nothing's really changed today. This thing has a nice setup. The next move breaks up into the roadmap line or through. This will be on like Donkey Kong right there. I'm kind of excited about this potential right here. Just like Meta. I'm really excited about this potential. We can actually get going here. Quit screwing around just sitting here. Google sure does look like it's going to reach down right there. All my drawings are taking forever to load. Nothing's loading. Microsoft. Still being soft. I don't know. I don't know if I trust this bottom being the bottom yet. It's awful deep. No, I mean, we found a little support and a little bit of, I don't know what you would call it, a little bit of resistance, dropping on the roadmap line there. And then we got away from it. And now we're flirting with making a lower low than we made back here Liberation Day last year. So be careful on Microsoft. I'm not sure that bottom's in. Nvidia, like I said, man, that I define that perfectly. Let's see if I can reload this and get it to actually save what I did. Let's see if it'll load my drawings. It's just being, I'm sure there's like 900,000 people like freaking out about the market dropping. So we had that initial drop. And we had this little baby market roadmap bounce in here. Little baby one. And I mentioned that that target was up there at 197. Right there. And we touched it. Coming in earnings. And I was like, if we do that, the earnings reaction is probably going to be down. Now, if we hold the roadmap line with a higher low, we've been working on since back here around Thanksgiving in the US, we could potentially go on up here, 220. But if we actually break down below these lows right here, we're probably coming on down to 150. I give the odds a little bit higher because this was a first move down. This was a sucky, choppy, sideways piece of garbage price action. And the correction would look best if we took another step down. Just the way it is. First move down right here. Retrace. Second move down puts us right in that 150 zone. First move down. Second move down. Why 150? Because that's where we topped out. Right back here. And we haven't been back to test it. We tried to run away from it. Ran out of juice. Probably need to come back and test it. Or we can go higher. That's the way price action works. Mainstream media wants to sell you a different narrative, but that's the way price action works. Tesla, still chopping in here. I mentioned we may need to push a lower low. Starting to look like that may be the operative plan here. We might need to come on down just a little bit lower to that 370, 380 area. It's possible we can hold. It's possible this is like a double bottom test here, just higher than this low we had back in Thanksgiving time. But if we start pushing into that at all, we're probably coming on down around 370. Most ideal. Would be really interesting right now to me. This stock right around 400. We cut that in half. Now, my position would be sucking it high. And this is just me speculating. If we should cut this baby in half, cuts the market cap of Tesla in half. Right here. Takes that market cap from 1.5 trillion down to 750 billion. Well, he just pushed the value of SpaceX up even higher last week with another capital whatever, getting close to 1.5 trillion here. maybe even 1.8 trillion, I think I saw on Friday. So if this pushes down to that, and this pushes up to like 2 trillion, couldn't they just like use some equity and buy this out from shareholders? Take Tesla private? That'd be a wild story, wouldn't it? And maybe SpaceX never goes public. There's the bounce. I like it. I've been talking about this coming up to the roadmap line for a while. If we bounce back off of it, we're coming back down. And 60 to 70 is the target. This is on the Paramount deal falling, Warner Brothers deal falling through, and the Paramount winning the bid for Warner Brothers assets. Maybe they're buying the whole company. I don't know. Paramount going to buy all of Warner Brothers Discovery. Netflix loses out, but they're not spending a bunch of money, and these whole shenanigans started back here when they announced they were going to buy them, and then now they're not. So we'll see what happens. Roadmap line resistance there. Pull back likely. That was just one big jump up. Likely to pull back and before we push on through. But if we just push on through, this could be set for a move higher. There's the high, there's the low. We had kind of an ABC in there. It wasn't super great, but 145, 150 would be the next upside targets there. If we can push on through that 110 area right here where we got this junk right there. We push through that, probably set for this 145 at least. I am long Netflix. Lights. So I'll go pull gainers. Things moving up $2 more in the pre-market. Put them on the gainers list. There were a couple of those, or like 100 and something. Like the list was bigger than I've seen it in a long time. Absolute giant list. No real theme, I think. I mean, you got some oil in here. You got some energy in here. You've got some defense in here. NOC, LMT. But it's kind of a smattering a little bit. Got some gold stuff in here. I mean, just things that make sense that they're up. Like the charts are up, and the things are up. But then you got stuff like Twilio. Of course, it's giving back the pop. I think things are going to settle out a little bit. And then we had giant decliners. Some crazy big decliners. Booking dot not going to the Middle East. Yeah. High flyer, $4,000. I mean, just you're like, holy man, $200 step. But on a $4,000 stock, that's 5%. Korea, I warned about this one taking a step back. Coming back up pretty vicious though. EWY. We hit this resistance right in here. And likely to retrace. But if we're just gonna push on through, the next level up would be somewhere around 237, which this gets to be ridiculous on KORU, which is 3x leverage to this thing. That's another 60% higher. And KORU would be 120% higher. So 121% higher from here. It's not even that big, but goes from 500 to 1200. This chart has been on a massive rip. If you had gotten in back here when I mentioned that we were breaking out in the 100 area, you'd be up 5 or 6 times. Probably a good spot to take some profit. Don't be greedy. Race probably coming on back down to 300. And lots of usual suspects in here. Let's go look at some setups today. What do you say? Setups today. Kava taking a step back. This one probably needs to retrace, retest that area of support before we push on higher. Roku. I gotta get through 100. Hood. That should be a bottom here. Go higher. Opportunity. Citibank almost touching the roadmap line. Yeah, there's so much stuff on Rocket Lab. Had a good launch. Still, you know, likely to touch the roadmap line. Or we go higher again. And I'll give y'all just a moment more to vote in the poll before I end it. Yes, still holding TSLL. Like I said, if Tesla goes down, it's going to suck. But I think we're going higher. Like, I was just speculating the potential narrative that's going to blow up everybody. Like, oh, SpaceX is going public and it's going to be the biggest blah, 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 blah. They're just hyping it to get the stock price higher so that they can take it all public. Lennar, this is not the sign of a bullish chart here. Let's see, DHI. That looks better than Lennar does. Toll Brothers. That looks better than both of them. So Toll Brothers kind of doing better than DR Horton or Lennar. Looks like Marvell's going to drop on out. That's probably coming back down. UAL. And getting this one, even despite all this rhetoric around higher oil prices, this is set for climbing right up here. Maybe even up here. DAL, right. Oh, man, look at that. Right up to the target. Next one up is 90. If we can hold that roadmap line. And then you got American that's just sucking it up. They cannot get out of their own way. Downtrend highs. So we're going lower low, then right back here. First Solar, can't seem to find a bottom. CSIQ has been my pick, but dipping a little bit. Not immune to all this. You know, 90% of stuff goes the direction of the market. 95, something like that. So, Elf Beauty. Watch out. That's a setup for going lower. I'm just kind of jumping around in here, trying to find any kind of opportunity that might be interesting. Look at that to bounce. XBI. Biotech. That looks like it's going to retrace to the roadmap line. And yeah, back to the setups that I mentioned we would do. And these are set up for my daily roadmap bounce pattern. The roadmap line there, links in the description. If you don't know how it works or you haven't ever seen it before, you want the code, click on my channel homepage right underneath, click the channel logo right underneath me. Go to the homepage, watch that video that starts playing automatically. I give you the code and tell you how it works, basically all for free. Now, if you're wanting a little more formal, you want something easy button to click and put it on your chart, you're worried about doing code yourself, well, easy enough. In the description, $5. You can click that, get the roadmap line. Now we're looking for this one, not the best example, but roadmap line. Looking for it to come up, retrace through it or touch it, and then get continuation higher. And we run the fib from the high points to the low points. We are looking as a trigger. This isn't in that video pin. As a trigger, I'm looking for a close above that 618. And then we're going to play to this 1.1448. This is a newer modification I added because I built this thing into an algorithm, and I tested tens of thousands of trades, and comes up that 75% of the time when you get a close above the 618, we hit this 1.1448. Now, where does that come from? It comes from the 1272 multiplied by 90%. So 1.272 times 0.9. I found that fib lines are kind of fuzzy zones. Like they're not always touched perfectly to the penny. So when I did some statistics on it, 90% plus or minus 10% seemed like a good spot. And so going conservative with the target, that's where that 1.1448 comes from. Right there. It ups the win rate to 75%. Profit factor 1.2. These numbers don't really mean anything because you need 30 trades to have a statistical significance. When you have tens of thousands of trades, that's pretty statistically significant. So that's the way this all works. But the warning here, this is low price stuff. All right, stuff under 20 bucks. Well, when you take the stop, which is always $1 below the low, and you look at that price right there, that gets to be a pretty big percentage, like upwards of 20% just for that $1 below the low. On top of that distance right there. That's a pretty big stop, percentage-wise. So low price stuff, be careful. But this works on all time frames, all tickers, all time frames, all prices. But just be careful. Low price stuff, you can lose significantly more percentage playing in there. Now, CVS, look at this one. Beautiful one right here. Nice uptrend, nice pullback, nice potential continuation. Target right here, 85.98. 47 trades. Profit factor kind of sucks, but better than the historical average of 75. So as long as you control your risk, profit factor. And the funny thing is, if you look back here, don't have the drawings. CVS was one of the ones I used for teaching this originally. Back here in 2021, when I first became a guru. Used that bounce right in there. And next up, eBay. Didn't fire off the algorithm. Interesting. Here's the high, here's the low. Get close above 100 target. Kids. $21 targets. Not sure I would play that one. PRAA. The only thing about several of these, I'm not keen on this downtrend of the roadmap line. It's not really part of it, but it just gives me a little bit of caution. That would be the uptrend 20. Only got 12 trades, but 90, like most of the time this one works out. That profit factor. Don't read into it too much, but it looks promising. It's hard not to get sucked into those a little bit. You got to remember, though, it's under 30 trades. It's not statistically significant. And STRA. That's the high. Here's the low. That one did stop out last time, so be careful. 20, 65.6. A little bit choppy, down, slight downtrend. 89 would be the target. THG. They can't all be winners. There's a lot of crap out there, so I'm always very selective. It's not just like, oh, these are set up and put my money in. It's not the way I do it. I always look for the best of the best stuff. I'm a retired trader. I only want to come out of retirement for the best of the best. And that would be the upside here, 191. That's good. That's not good. And kind of not good. So these are below the statistical average across tens of thousands of trades. That has a statistical significance. I probably wouldn't trade that one just for that reason. And just in case you're wondering about my track record, Why should I listen to you? This account I opened last year, April, tax day, or refunded it tax day last year. Right in here, all time. You see, this was kind of a dead account. Didn't really trade in it. I didn't like Robinhood. I linked it up to K-Info last year. Tax day, right here. You see? And started consistently making money. Does your profit loss look like this? This is mine. I put about 75,000 in here to begin with. I've added more, taken some out. I probably put in at the peak 95, and I started taking some money out to live off of a little bit. And I mean, rock and roll, right? We had the last year $75,000, so basically double my money already. Nice. So just small, repeatable trades. That's what I focus on every day. That's where I put my risk. So I don't just chase everything that has a setup. It's hard for a lot of people. Like everybody has FOMO, fear of missing out on the next big winner. It doesn't take a lot of big winners. It just takes just takes consistent small winners. That's what does this. That chart's like going exponential higher, right? Beautiful. So small winners turn into serious money, whether you believe it or not. Just being able to make $1 and keep it by the end of the week. So SPY, jump back down, check her out. See what we got cooking, good looking. Let's pull over the gamma. About 10:15, close. 10:09. See if this thing's built up at all. This is just bullflow.io. Links in the description if you. Oh man. That would have that. That's interesting. Wonder why that's sitting there on March 3rd. March 3rd is just a Tuesday. Wonder why we have a 1.5 billion on 675 tomorrow. What's happening tomorrow? Literally nothing tomorrow. Economic news wise. That's interesting. So there's no real bubble. It means that chaos can erupt in this chart. The big level down there at 675 for tomorrow. Man, there's just no, there's nobody playing options. There's no like pressure on the market from the options market today. I'll be very, very careful. I've been watching this since mid-December when I found this heat map thing. It's probably the first day I've ever seen SPY not have hardly anybody playing directionally in here. Man. This is kind of wild. So I'm going to go 691 on the top. I'm going to have to go 675 on the bottom. That's going to be a really big range today on this gamma. So 690 on the top, or 691 I said. And then down to 675. Woo. It's a pretty big range. And look at the levels. This is usually the way most people look at gamma like this. Oh, look, there's that big 675. So we got cooking here. Yeah. So on SPY, heavily influenced by this level, this expiration on the 20th today. And this is why I kind of wait for the bubble to build, because we want today's options playing to build. But right now we don't, there's just no, there's just no build today. Like it's not the biggest most influential ones, the 20th in 3 weeks. So it's hard to read this over here because you'd be like, oh, well, it's going to do XYZ between now and then. Whatever people love, you have to realize that we're getting to have almost 70% of the volume, the daily volume, played in 0 days. Now, there is some bigger forces going out here, but the 0 day, the fact that 70% of the market playing options plays 0 day options, that's where the big influence is. Now, when the 0 day options are not the biggest influence in the land, you got to be a little careful. That means chaos can take hold in the market, or we could just freaking rip. I mean, we could just, means that the options market's not really controlling what's happening here. Be cautious. I'm not even sure I can pick a pin today at this point. It's growing, but it's not growing very fast. If I had to pick something right now, I'd probably say 684, just based on what I'm seeing. That big level's down there at 675 on Qs. But if I was going to pick a pin level, I'm going to say 684 right now. That's kind of the range we got for SPY today. QQQ. Let's see what we got. See what we got. This is where it gets kind of a little bit nerdy here. Let's see. Levels. Qs. And again, we got this big level out here in March. We got diddly being played today, hardly. You know, on SPY, we at least had a couple days piled up, but this is like a little bit here, a little bit Friday, a lot of it on the main monthly expiration. It's like the money's just not in big tech right now. So big level down there at 601. And then if we were balancing this out, it's probably up around 607 maybe for the end of the day. So we have this big level at 601. Maybe it's 600. I'll have to look at the gamma here in a second. But then, what did I say? 607? Pull it back over. Let's go 608. This could be, we could be rallying on up back up here. That's where it looks like it may pin based on the levels. And looking at the heat map. Load, please. There's no bubble. There is nothing. At 600. That's the big level there. And it's sitting out there. But it's not even a big, not even really big, because, you know, Q's had like a $1.5 billion tomorrow. Biggest level on the board here is 300. We got a 260 right there at 605. And this is, I'm going to go 600, 610. Even though we started out lower, let's go 600, 610. That's the range I expect us to hang out today. We could easily get out of that, though, because there's just no big levels being played right now. Now, you know, give it 30 minutes, maybe more shapes up. Give it an hour, maybe more shapes up. This is a evolving landscape because, you know, 75% of all the trading volume any one day is in 0 days. So this will shape up as more of that volume plays out later in the day. But right now, that's, I don't know. Sketchy. Let's see. ES. Yeah, we're kind of bucking the trend here. Pushing up through. So that big resistance comes up here. This could be low in place, but that's right now. It's like 1, 2, 3 on the price action. That low, that high, that low. Yeah, we're coming up into the resistance here. So if we get above 6,900 on the futures, not on the cash, it's futures. That's an indicator that we're probably going to go on higher. On the cash index, probably watch this roadmap line right around 68.80. If we bounce off of it, probably coming back down. Then NASDAQ cash, watch for the resistance right there, about that 24,900 area, maybe 24,930-ish, 940-ish. And then NQ, pushing up through the roadmap line. That's good. That's good. Pushing to 30-minute, though. Not so good. First move up, retrace. Coming up, we got to get above 25.20 to indicate we're going on we're going to push on up higher. Yeah, 25.20. And then it may be resistance right there at 25,200. Of course, the daily is below us, so the daily is support. And the daily support on S&P. We haven't touched the daily on S&P yet, so wouldn't surprise me the next 2 weeks if we're right down in here. Right there. So that's what we got cooking today. And that's it. I'll be on Market Masters about 11:30 with Jack. We'll talk wheel trades and stuff that's actionable today and income trades and things like that. If you want to come hang out, links in the description. Otherwise, I'll see you same bat time, same bat channel tomorrow morning. Check it all out again. Have a great day.